Trading Nut, episode 163.
So then this guy did a market breakdown and they started talking about order flow data. And I was sitting there and I was thinking, order flow data, what is this guy talking about? The first thing I did was go to Google. What is order flow data? Boom. And I started reading up on order flow data. Then I went back through that same guy's videos. I went through all of them to understand exactly why is this guy so good, man? Like why is he speaking like he is, he's speaking in a way that I've never heard anyone speak about trading before.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Up podcast. I'm your host, Cam Hawkins, and today we've got a trader that goes by the name of Rolio Jack on the show from South Africa. Look, he got told that trading's easy, and it took him 5 years to master it, so it wasn't that easy. And I know a lot of us go through that same journey where you get hooked into it, and it takes us years to get there, including myself. And we're going to hear from Rolio today as to how he managed to navigate that journey and what happened at the end. So he's there. He's a full-time professional trader. So you guys have got a treat in for you coming up. We also shot a video after the show, so you've got to go and check that out. He breaks down his strategy. Then he shows us a great way to pick sentiment in the market and give yourself a direction, which is external to the charts. I've not seen this before, so this is fantastic. You've got to go and check that out. And also we put him to the test. Get him to predict where a market's going to go and what his trade setup would be and whether or not he gets in. So I haven't seen what he did, but there's a video there that I'm going to piece together, and you guys, I'm going to be as surprised as you to see if he got it right or if he got it wrong. All right, so guys, we're going to get into that interview in a second. Part of what we do talk about is mindset, and if you are looking to get your mindset on track for trading and for life, then my own personal mindset coach, Andy Murphy, has a program that he's put together for Trading Nut listeners called the Genius Trader. Now, there's a free webinar that you can go and listen to. I'll tell you what that is in a second, but look, there's been some fantastic feedback coming through from the guys that are going through this program already. Here's like one of the guys said in the chat this week. So the course is really helping me to flip the switch. I had a hard time getting serious about trading. I was going to see a psychologist. It was torture trying to force myself to stay present. Now it's game on. Looking forward to more mental progress. So guys, it's really having an effect on these guys that are going through the course and the program and the room there with Andy. And if you do want to check out what it's all about, go and check out the free webinar. It's called Discover the Number One Brain Mistake Stopping You from Being a Millionaire Trader. So there's links to that under the video or on tradingnut.com. Other things going on here at Trading Nut before we get into this interview, we've got the Robot Builders Club. I'm doing a $100 account challenge. I'm trying to double a $100 account, right? We're 1 week in, we're 20% up, but we are 20% in drawdown after the weekend spread increase. So I don't know if it's going to end up with 20% drawdown by the time that the week starts up in like literally 15 minutes for me. So yeah, that's where we're at with that. So if you join the Robot Builders Club before that doubles the account, or it could blow the account, before it blows the account, then you will get a copy of this robot called Trailblazer Bot with your membership, and it's the only way to get access to it now. All right, guys. So yeah, if you're looking to automate any of what you do, semi-automate, fully automate, then yeah, do check out my Robot Builders Club where I teach you how to do that with no coding at all. And also, if you're looking to get funding, then check out these guys. Let's hear from them. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With CTI, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed. All right, folks, here we are on Trading Up. We've got Rolio Jack here in the house, all the way from Cape Town, South Africa. Welcome to the show, Rolio.
Thank you. Thanks for having me. Thank you.
Well, look, you've got quite the story, and it's a story that I think a lot of guys listening tend to go through or never get to the end of. And you managed to get to the end of it, and it was a grueling one by the sounds of it. So do you want to start off by telling us your trading story?
No problem. So it started back in 2013 when I was working for the company. So what happened was this one day, I had one of the guys that worked there asked me to just give him a lift home because it was on a Friday and there was a bus strike and there was no buses. So he asked me if I can give him a lift. So I said, no, it's fine. Yeah, you can get in. And I still remember it was a Toyota Corolla, the 1987 model. So I was driving on my way home, to go drop him off first. And I saw he was busy on his cell phone. And I could see the green candlestick and the red candlestick, but I wasn't worried about that. So as we were driving, he just looked at me and said, you know what, I just made $10 now. And I said, wait, what? You just made $10? And I said, but how? He says, no, on the IQ Options app. So that's the first platform that I've saw actually, what trading is about. And he said, well, I just made $10. And I asked him, okay, but how does it work? And then he said the one thing that makes every person jump into getting trading. He said, it's easy. And then I'm like, I was like, okay, well, but how does it work? And he says, no, all you have to do is just determine whether the candlestick is going to close below or above your entry within 1 minute. And if you guess it correctly, then you will win a percentage of what you've invested. And so I asked him, is that all just 1 minute? So that means I can make a lot of money out of this. And at that moment, my life started flashing in front of me. I could see myself driving an expensive car, a fancy house. And that was basically all I could think about. But then I dropped him off at home. And the first thing that I do when I got home was go on to Google and what is IQ Options, and downloaded the app, got my $10,000 of demo, and then I started trading the demo account. So I went through the demo, buying and selling. And at that point, I didn't know what risk management was. I didn't know that you could become emotionally attached to trading as well. To me, it was just that, okay, well, I just need to buy and sell. So I went through the demo, made a lot of money off the demo, I think like all of us do all the time. And what happened then was I felt very confident. I was like, okay, I'm ready to put down my $10 into this account, and I'm going to tell my story to the world of how I flipped $10 into $10,000. And I even took a photo of it, just like the before and after photo, just like before.
Ready for it.
Yes, I was like, this is before, guys, and I'll let you know probably 2 or 3 weeks down the line how much I've made. Unfortunately, that was not the case. So it was not as easy as I thought it would be. And the one thing I found about trading for myself was that it's just one of the things that you go into that's very difficult to get out of. Once you are hooked to trading, you could probably leave it, but there's always that thought in the back of your head that tells you this is the only way that you are going to make money. This is the easiest way to make money. So you always want to go back there. And I think for speaking of myself, based on where I've come from, based on my circumstances and, where I stayed and all of that, I just wanted to get out of there. And the job wasn't paying enough money. So I was looking for that opportunity. Now, the question at that point was, was I gullible enough to believe that this was going to get me out of the situation? No. Was I desperate? Yes, 100% desperate just to get out of there. And I was willing to do whatever it takes. So unfortunately for me, $10 did not work. So I lost $10. Then what I noticed was on the left panel was a chat on IQ Options. And in the chat, there was the binary options chat as well. Then I saw people in there sending buy Euro USD, buy GBP USD, and then that's the first time I saw a signal, like a signal that someone sends a signal. So what I did was I started following those people, because when you are an amateur in anything and someone else that you feel knows more than you do to do something, you're just going to go with it because you believe that they know more than you do, or they are probably the experts in it. So what I did was I started following those people, again on the demo account, and the money was just going ting, 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 and it was just going good. And then I felt, okay, good. I'm just going to try one more time. And there's always going to be one more time. I deposited again, and then boom, gone again. So then I lost it again. And at that point, the one thing that went through my mind was that I'm going to, the probabilities are so, it's 50-50. It can either go up or down. But why is this so difficult to just predict? Like, why? Why is it so difficult to just predict whether the market's going to go up or down within 1 minute? And I think that's one of the funniest things in trading. It can either go up or it can go down. And the worst part is most of the time, most of us are always wrong. And then I realized at that point that, okay, maybe I'm not ready for this part of the trading. Maybe I need to just take a step back to understand what it is that I'm doing, because to me, it was said in the car, it's very easy. All you have to do is click buy or click sell, whether you think the market's going to go up or down. I wasn't taught about, you have to manage your risk properly. I wasn't taught about this is going to mix with your emotions. You're going to feel a certain type of way when you lose money. And I think at that point is where I learned that losing hurts more than winning makes you happy. Because if I make money, so if I made money, I was happy. But if I lost money, I think I felt more miserable. So if I had to put the two on a scale, I think the losing would go up here and the feeling of being happy would probably be around here. And because the risk to reward ratio was uneven, if you lost a trade, you had to go and double the trade in order to recoup what you lost, in order to gain a profit on top of that as well. So that is what made it so difficult. So for instance, if you had a $10, you traded $1 and you lost it, you would lose $1. But if you won, you would have won 70% of $1, which is 0.70. So if you lost $1, in order to recoup this, the $1 that you lost, you had to then trade $2 in order to recoup the $1 plus to add more profits. And if you lost that $2, then you know how the story goes. And that's how I got also taught by these guys in that chat room about martingale. The martingale strategy, they call it the martingale strategy, where you lose this, then you go there. And I think the desperate part of me didn't want to get out of this because I felt that I could make this work. Then what happened was, then they started sending stuff like SWR. Guys, this is a SWR shot. Guys, go all in with the next trade. This is a definite one. And you sitting there thinking to yourself, okay, well, and I'm sure you know how this goes. Like, you sit there, you don't want to take it, but in the back of your head is telling you this can change your life. You could probably double your account now, or all of that emotions run through your head. And because you don't have self-control and you're letting your emotions take over, what do? So you go out there and you take the trade again, and then you lose. And that's when things just start falling. That just starts, scrambling and crashing down. Any case, so then I did what any amateur trader did. So we go on to YouTube. And what do we go? Search on YouTube, how to trade IQ options or strategy for IQ options. And the first strategy that I was introduced to at that point was trading with Bollinger Bands. So buy when the market hits the lower Bollinger Band and sell when the market hits the higher Bollinger Band. And because I didn't know what Bollinger Bands was at that time, I thought to myself, okay, here is the holy grail of trading. I've got it. I've nailed it. I'm not telling anyone about this strategy. This is mine. Then, boom, back to trading, back to the platform again. In there, took my card, again there, $10, let's go. Bollinger Band, doof, doof, doof. It worked for a couple of days. I would say not a couple of days consistently, but it worked enough to make you feel that it actually works to a point where you lose so that you can go back because you think it works and you think you are the problem because you took trades that you're not supposed to. So you just go back and you just trade again. So at the end of the day, that also didn't work out for me. And I have to say, I think I felt very despondent. I felt, the morale was completely flat on the floor because like it's like wanting something to work, and as a person, you're going out there and you're putting everything in it, but it just doesn't seem to work. And you ask yourself, but how is this other people doing it? And I'm doing everything. I'm reading about, all kinds of stuff on Google. I was the kind of person, which if I think back now, I think it was kind of crazy, that thought that you should have the news being live streamed here next to you while you look at the charts and listen to the news, and hopefully you'll get something out of there. I was that kind of person. I thought that they're going to say something on the news that's going to make you buy or sell at that time. And I was going out all over the place just to get the information that I needed to make this work. And unfortunately, it was quite difficult because the only resources I had access to at that time, as opposed to baby pips and all of that stuff that you get now. So I wasn't aware of that. So all I had was Google, YouTube, and every day I would take a strategy and I would use it for a week or two. Okay, this is not working. Go back onto YouTube, how the best trading strategy and the keywords would always be it's the kind of stuff that you go on Google for, that you want them to tell you, although it's wrong, but you Google it in a way that you want it to be right.
Right.
It's almost like when it's almost like when 1 plus 1 is not 2, but you go on Google and you say 1 plus 1 is 2, because you just need that confirmation to say that this is the way to do it. And I spend a lot of time on YouTube looking for strategies. I also had the RSI strategy where you have to wait for the RSI to go above 50, I think. And it was just a lot of stuff. And I was literally going back and forth between YouTube and the IQ Options chat. And then what happened one day was there was a guy on the IQ Options chat, because in the chat, they would have the South African flag next to their name, and they would have that VIP logo to say that they are from South Africa and they are VIP. So VIP would normally be the people that's in the upper class, but they could also be people that had lost all their money, that you think is good people. So I met this guy on there. I saw the South African logo, and I thought to myself, okay, let me reach out to someone that's in VIP, because this guy looked like he knew what he was doing. So I got in contact with him. So you couldn't leave your cell phone number on the chat because then the admins would block you. So I searched for him on Facebook. So then I got him on Facebook. So then I asked him, hey, are you the guy from IQ Options? He's like, yes. So I asked him, where does he stay? So he also stays here in Cape Town. And then I asked him, hey, how did you get to VIP? He says, no, because you have to be good at trading and all of that stuff. So I asked him, is there any way that you can help me? And I think he probably saw that as an opportunity to make money. Or for me, he's like, okay, here's my opportunity to make back all the money that I lost. Let me use this guy. So he then introduced me. He said that there was a group that they are part of, that they are trading for. It's 500 Rand per month, where they trade together and they would tell you, buy this, buy that. But the accuracy was so high, like it was very high. And again, because I was not gullible, I was desperate. I'm not going to say I was gullible, because gullible is not a word to use if you want to make a lot of money in trading. It's just that if if you come from a certain background, you just want to get out of there because you desperately want to get out of there. And I was saying, what, it's fine. I'll pay the 500 Rand. It's not in dollars. So it's about
what's $345 a month, yeah?
No.
Oh, sorry.
So it's actually in Rand. So it'd be $34 per month.
Okay, right. So, yeah, cool.
Yeah. No, they're not that
ridiculous.
Expensive.
Yeah, okay, right. Gotcha.
No, they're not that expensive. Yeah. So then I joined that group. And then I think it's like everything else in life. You go to McDonald's, you see this nice burger as it is being displayed for you on the menu, and when you buy it and you get the burger, it doesn't look the same as it is on the photo. So that didn't work for me as well, and that further pulled me, because now I'm just forking out money. I'm just, there's this money going out of my pocket every time. But the ROI is sitting at zero. So because I'm not getting anything back for the, so I was going through a difficult stage at one point because because you know, I had the drive, I had the urge to want to make a success of this, but I felt like, you know, all the people that I ran into was not giving me the information or the help that I was looking for. And I was also not patient enough to make use of the information that I've gathered through YouTube and make the best of that as well. So I think that is what made it so difficult for me. So what made it quite difficult was, just one, no, no. I think what made it so difficult for me, it was just you have that, and every novice trader, every beginner trader out there, we have that desire. And that was the problem that I was faced with. And you know, one thing I've learned, if I look back at it now, it was my desire to want to get rich so quickly that made me lose money every time. And that is one of the reasons why I kept on losing, because I went into trading with the mindset of, I want to break free, almost like that. So I walked through that with that kind of mindset. So that went on from 2014, 2015. Yeah, so about 2015, 2016, somewhere around there. And then, so should I just continue?
Yeah. So after 20,
Sure.
So this was all binary options, right? So it wasn't.
Yeah. So this is all,
and people don't really do that now. Like, I mean, there's.
No, I don't think a lot of people do it now.
Exactly. So this was binary options days. So what moved you away from that?
So yeah, I was going to get to that part now. So then what happened was, so on the side panel again, on the IQ options chat, I saw that they had a Forex chat there as well. So there was a chat where people just talked about Forex trading. So then I saw this person were talking about, hey, buy at market execution, take profit, stop loss. And I'm looking at this numbers, I'm going, stop loss, take profit. What is this guy talking about here? And then he said, no, it's a trade type. It was swing. I'm like, swing trading? What the hell is this? So I did the same thing that every other trader would do when we don't know, or any other person would do if we don't know what it is. We go onto Google. What is swing trading? What is a stop loss? What is a take profit? And that's when I got introduced into Forex trading, the MT4 platform. And that's when I started shifting into trading, like long-term, if I was to say that, as opposed to 1 minute and 15 minutes, because I was so used to just 15 minutes or 1 minute or, 5 minute trading. And then eventually I got into, through that. And then it was back to the drawing board again, back onto YouTube, how to trade Forex, best Forex trading strategy, how to swing trade. What is swing trading? What is the best way to swing trade? Then I'll show some stuff about the 200 moving average, the EMAs, and then it started becoming all of that stuff, the Fibonacci trend line, counter trend line, head and shoulders, inverted head and shoulders, W's, M's, and all of that stuff. Well, then I started getting into stuff like that, price action, market structure, and then I gathered all of that information once again. But I always thought that, okay, I need more. This is not going to help me. I need more, because why? And then I did the worst thing that anybody could ever do as a beginner trader. I went onto Instagram and I started searching for people on Instagram, for traders in South Africa and Instagram. So the problem once again was, the body and the mind, we want what the eye sees. So there was people posing there with, profit rolls of 200,000, which is about $25,000. I'm just speaking dollars now. People posting profits of $25,000, and that in rands is a lot of money. Like, that would have changed my life back then. I was like, $300,000. Give that to me. I need that. And people are posting these fancy cars, and people are just going crazy. And I'm sitting there thinking, I want to be like this. I want to be just like this guy. I want to stand on my car also. I also want to throw money at people and think nothing of it. And then I did the honorable thing. So it's all about what you see and not about what happens, what's actually happening. So then I started joining a couple of people, just 2 people in South Africa. And I do not want to mention any people because I don't want people to kind of start running after me. So I joined 2 people in South Africa, but I also joined 2 people outside of South Africa as well, because I didn't get the experience that I was looking for from the people that I had signed up with here within the country. So the information that I received that I thought was going to be mind-blowing, the way that it was portrayed or marketed to me was most of the stuff that I got for free on YouTube, which is basic technical analysis as well. So I didn't get the that thing that tells you, this is the guy I was looking for in my life. Yeah. So I wasn't getting that. So most of the stuff that I was getting was a break and retest, break of consolidation, break and retest, how to draw a trend line, how to draw a counter trend line. It's fine. It's good. Technical analysis, I love it, but I need more than just technical analysis. And then at that point, I was also introduced to bots or automated systems. And I was like, what? You get automated systems as well? So you're telling me I don't have to do anything and I will get something else to trade for me as well? And I've got nothing against automated systems. I do feel that there are some of them that are programmed or coded very well, but I feel that there's some people that's also just manipulating the opportunity of automated systems to just make money off the people that are actually doing a good job with it. So then I thought, okay, well, if I can just cut my journey short, then I don't need to go through any courses anymore. I can just buy this thing. We were then being told how to set it up, and I can just let this thing trade for me then. And I thought that was going to be it. So then what happened, I went to the bank because I didn't have the capital that was asked for it. So I went to the bank, made a loan. So I did the honorable thing, took out some credit. So I took out some credit because I wanted to buy this thing that was going to change my life. So I took out a loan from the bank to purchase the product, and I also had some funds available because I wanted to deposit it into my trading account as well. And at that point, I was trading with JP Markets, which was a well-known broker here in South Africa. At that time. And at that point, the NASDAQ 100 was booming here in South Africa. People were crazy about the NASDAQ. Well, they still are, but the NASDAQ was booming. The most highest risk index to trade that people love to trade as well, and they still do. So the bot which I purchased was purely focused on currency pairs, but also the NASDAQ 100. And I thought, okay, this is probably the opportunity. So I took out the loan, bought the bot, deposited some of the money into the trading account for the bot to automate the system as well. And then that also didn't work. So, I was like, you know what? I'm done. I am done now. I'm done with this trading stuff, because why? Nothing is working. Nothing is giving me, I'm not getting what I'm looking for, and this is just not going to work for me. I am done. I'm done with trading. I'm just going to stick to my job because this is it for me. That was it. I was at my lowest. I think my life created a lower low at that point. But then you know what? I did an undertaker, and I just got myself back up again. And I told myself, okay, let's go again. But at this point, I started, blocking certain things out. First of all, going on Instagram, looking for that motivation, or looking for people to help me and all of that stuff. And I went back onto YouTube, and then I was like, please, Jesus, if you can just send someone my way. So then I was doing again the best way to trade Forex. And then someone came up, which was the guy from Transparent FX. So he pulled up.
Okay. Yeah.
Yeah.
I tried to get him on, and he's not. I can't remember what happened. Didn't work out for some reason. I don't think he contacted me back.
Oh. Okay. Well then, then he pulled up. So then this guy did a market breakdown, which I looked at, and they started talking about order flow data. And I was sitting there and I was thinking, order flow data, what is this guy talking about? Order flow. I've never heard about order flow data in my life. And I saw this numbers that he had on the order flow data. And as curious of the person that I am, the first thing I did was go to Google. What is order flow data? Boom. And I started reading up on order flow data, what it does on the Chicago Mercantile. Started reading up on all of this stuff. Then I went back through that same guy's videos. I went through all of them and I read it. And, I just went through it to understand exactly why is this guy so good, man? Like why is he speaking like he is, he's speaking in a way that I've never heard anyone speak about trading before. And I told myself, you know what? This is it. Here we go. This is exactly where I want to be. So I did the honorable thing, and I went back to the bank because it is quite expensive. So I went back to the bank, took out the final, the finals that I could, and I enrolled. Been there for just over 2 years now, and from the time that I started there, I think within, after getting the information and all of that, then I spent 3 months just doing back testing to understand, to make sure I understand exactly how to implement it and how to trade it. Then on a demo for a month. And then ever since then, I now know what risk management is. I now know what trading psychology is. And I understand why it is so important to not just run after the skill, and learning to understand the psychology behind trading first, learning to understand how to manage your risk as well. Also understanding that Forex is not something, or trading in general is not a get-rich-quick thing that's going to get you from point A to point Z overnight. You're not going to make $1 million from $100 overnight as well. You have to be patient, and you have to understand one thing. Before you invest into anything, you have to invest in the knowledge to understand the thing first. And that's the last thing that I did. I did everything apart from investing into understanding what it is that I want to do first. And that, I think my biggest downfall again was I was so focused on just wanting to make money, because why? That is how it was portrayed to me by the influences that I was exposing myself to. That is what I saw. I saw people in big houses. I saw people in in nice cars. I saw people with lots of money. And I wanted to be like that as well. Little did I know that it's not going to be easy, but I was always looking for the easiest way to do it. And as a result of that, I had to pay the price, and the market punished me over and over and over and over again, to a point where I had to sit down and reflect and think about what it is that I needed to do first before I actually got into trading. And that's one of the reasons why I started my YouTube channel as well. So, and I speak a lot about these things also. It's because it's just to make it available to new traders that gets into trading, to understand that these are the kind of things that I did not know back then when I came into the trading game. So I spoke about the characteristics of a good trader, like what characteristics do you need to possess in order to be a trader as well. And because these are all of the things that we overlook when we get into trading, because we're so focused on how much money can I make? How much money is this going to get me? And because of that, I had to pay the dear price. But you know what? What doesn't kill you only makes you stronger. And today I sit here, left my job, full-time trader, and I am very fortunate to have gone through everything. But if there's one thing that I always kept in the back of my head, and that was, you know what, this can only work if you make it work and if you put in the work. Other than that, it's not going to work. And that's why up until today, as good as I am today, or as good as I would like to think I am today, I still do back testing. I still go out there and try and source new information and see how I can even better my skill. And I continuously share that information with everyone as well, because sharing is caring. And the only time you look down on someone else is when you're trying to help them up. And that's what I do. So like a good song Antonio Hawk says, story of my life. That's it.
Tony Hawk, the skateboarder or the...
Yeah, so on the PlayStation 1, there was a song on the, story of my life.
Right. And he sang it, did he?
Story of my life. No, it was on the game.
Oh, it was on the game. That's fantastic. So, I mean, to sort of summarize that for the guys that listen to this whole story, well, how would you summarize it in like terms of like your lessons learned versus what, like we went wrong, and then what changed and where it went right, and what? So if you had to summarize that into sort of like in a couple of sentences, what were the things that they need to do differently to get to the point, to get over that hurdle of like, I just want to make some money? How hard is it?
Okay, well, the best thing to do is to like I said, spend some time, invest in the knowledge first, get a grasp and an understanding exactly of how the market works. The most two important things that you want to take away from that from the start is the psychology behind trading, as well as the risk management piece as well. And then the last thing is, don't focus too much on the money, but focus on acquiring, to empower the skill even more. And just keep, keep building yourself, because I always believe that if you plant a seed in your garden, it's not going to grow without you watering it. So if you can be taught by the best traders in the world, but if you don't practice that skill over and over and over and over again, then you'll never get good at it, because they say knowledge is power, but applied knowledge is power. Knowledge on its own doesn't mean anything if you don't actually go and apply it. So that is what I would say. Don't run for the money, but run for the skill first and master that skill. And then you can go into the world of making money, because I worked it the other way around. And unfortunately, I had to pay the price for that as well.
So when you studied your order flow, you worked it out, you got to the point where obviously things started to change on a trading account point of view. Can you walk us through that part of your story?
Yeah, so as I've exposed myself to different confluences that you need to look out for, because I always believed that technical analysis was the only thing that makes up the market. Once I got exposed to order flow, I then went further on to being exposed to sentiment data as well as fundamental data, and the key aspects that it plays in the market as well, and the impact that it has on the economy of that particular currency that you might be looking to trade as well. So how that helped me was it allowed me to to gather enough information first before actually going into the market and say, okay, I'm ready to buy at this price because of X, Y, and Z. I'm willing to trade a 0.15 lot size on a $500 to $600 account. I'm willing to risk 1% and my take profit is 3%. Because I've gathered enough information, I'm willing to risk slightly higher on this trade, because I feel with all the information that I've acquired, the trade is definitely going to go in the way that I want it to go. So I'm not sure if that answers the question, but that's more in the lines of how I went about implementing the data into the way I trade today.
Okay, so let's jump into some stats. I mean, what are the stats around your trading at the moment?
So what you just referred to.
So how many trades a week, I suppose, would you take?
So, well, on a weekly basis, we normally take about 3 to 4 trades. Sometimes it's quite difficult to say how many trades we take per week, because market environment sometimes differs, and also because we've got a set of rules that we follow. So we don't know how many pairs would satisfy that rules within that given week. But once the rules are satisfied, then we trade it. We also do the day trading. So if we have to do the day trading, then we're probably looking at about, so if you have to include the day trade with the swing trade, then it will probably be about between 7 to 8 trades for the week. Mostly the day trades, because the rules that we follow for the day trades quite differently to the swing trading. But the swing trade just has a higher percentage in terms of profit margin compared to the swing trading. So the swing trade, we trade 1 to 3 risk to reward, and on the day trade we trade a 1 to 2 risk to reward. Yeah.
Okay, and what about the win rate for those? I mean, how out of the 7 to 8 trades a week, how many are you winning?
So for the mentorship program for this year, we are up 9%. And then for the day trade, because, I've got another group where I share all of the trades that I send. We've had about 125 or 127 take profits hit, with about 25 stop losses, which is the average risk to reward on trades like that sits between 1 to, well, it's mostly a 1 to 2 as well. So I've got the mentorship that is worked out on just percentages. So that's how I calculated in the mentorship program. And then I've got another group where I basically say any trade that I take with those guys as well. So in terms of where we follow the rules, we're up 9% for the year. And I know 9% might sound to some people like, wow, that's not a lot of money. Or not, that's not a lot. But depending on what your account size is, and because I believe in working on percentages, that allows me to keep track of how well we're tracking in terms of the profit growth over the year, as opposed to how much money we've made. The important thing is just to be consistently profitable, and that's what we strive for.
And just so for context, people listening to this in the future, we are 7th of February at the moment as we're recording in the weekend, so it's about a month into the year. So if you want the time frame.
Also.
Right, okay, cool. So and what instruments are you looking over?
So on my watch list, I've got everything on there. So the only indices that I trade, the indexes I trade would be the NASDAQ, the Dow Jones, and the S&P 500, because I focus so much on the US fundamental data. And then I trade most currency pairs as well, but I've got everything. I've got the exotic pairs on my watch list as well. So what I basically do every day is I go through the list, each one of them, and see which one of these pairs does satisfy the rules that it is that I'm looking for. So if that particular pair satisfies the rules, then we are unfortunately going to have to trade you for that given day. So I don't have a particular pair or like one pair that I trade, or this pair or that pair. I've got everything on my watch list. So the only precious metals that I do trade is gold, because there's a negative correlation between the US dollar and gold. So when I do the homework on gold and the US dollar, I know exactly what I need to do with gold. And then again, the Dow Jones with the US dollar, the NASDAQ with the US dollar, and the S&P 500 with the US dollar as well.
Cool. And so what is your, typical trading day look like now, and what did it look like when you were working a full-time job?
So when I was, when I was working, I used to wake up at 5 o'clock because I work out in the morning as well. So, I work out in the morning. So when I was working, I had to wake up at 5 o'clock because I had to work out first. That's the only thing that's keeping me sane, just to make sure that I am focused for the day. So then I'll wake up at 5 o'clock. Then what I do is I would jump onto TradingView. So what I did was I used the price alerts based on the strategy that I trade, and I wanted TradingView to alert me when the market hits a certain price, as opposed to running to the toilet 500 times to go check TradingView and see what's going on when I was at work. That was just much easier for me to just wait for the market to go, okay, the alert, like the NASDAQ had just went to 14,500. Then I know, right, I have to go to the toilet. The people used to make fun of me and call it toilet view instead of trading view.
Right, okay.
Yeah. So then I knew, okay, I have to run. So,
sorry, what was the job that you were doing?
So I was a team leader for a outbound call center. So we sold short-term insurance. Yeah. So I was managing a team of, 12 or 15 people at that time. So you had to be there as well. So you had to be there because the people always had a question that they had to ask you. But trading is important also. So I had to make sure that I had to find the balance between the two. So that's what I did. I would set my price alerts looking at certain pairs where the rules were satisfied. I'll probably spend about half an hour going through all of them, check, okay, because I do weekly market breakdowns on a Sunday where there's potential trading opportunities for the week. Then every day I would just go through them and check which one is ready to be traded or which one is ready for us to take a trade on. I would set the price alert, wait for TradingView to alert me to say, hey, the price is just broken, stuck, or it just reached a certain price. Then I know, boom, I have to run. Then I look at the kind of price action that's happening around there, quick 5 minutes. And if I'm confident in what I say, then I would then take the trade, just alert the students to also just check the chart to make sure that everything aligns with what I'm seeing as well. And then once I get the go ahead, then, well, I don't need the go ahead, but then I will take the trade and then they will just follow to take the trade as well. Because take profit and stop losses, we know exactly where they go. And that was then. So I could prep everything in the morning. So now I sleep late because I don't have to do anything. So now I sleep late. So I'm not the kind of person that is there when the London session starts. I'm not the kind of person that is at my desk at 9 a.m. or I'm not the kind of person that's at my desk when the New York session starts to catch the breakout. I'm not that kind of person. So I wake up later now. I'd probably sleep to at about 9 o'clock or 10 o'clock in the morning. Wake up, workout, cold shower, come sit down, then look at the charts and see if there's nothing there, then I'm just going to go back and play GTA Online. And then I've got my phone with me all the time. So I'll just check the charts, in between as I play. If I see an interesting opportunity, then I will, put the headset down, run into the room, come sit at my desk, and then I'll sit here and I will see. And because I've got so many students, I don't know if it's a lot, but because I've got all of that students, so they're always looking at the chart. So they will always send messages to say, hey, do you think that we should enter this trade now? We think the rules are satisfied for this currency or for this trade or that trade. That just makes it easier for me to not be able to look at the charts all day because I've got them looking at it as well. And that was the main idea for why I started the program as well, so that I don't have to sit in front of my PC all day. But I've actually got people out there looking at the charts and just telling me, hey, I think there's an opportunity on USD CAT. What do you think about it? So now that's kind of what my day looks like. So work out, look at the charts, play games, then I work out again, then I run, come home. Then I do some videos for my Instagram, for my YouTube, do the breakdowns for the students in the morning, answer all their questions in a video, call as well. So that's what I do every morning, do the Q&As, do the market breakdowns, work out. It's routine. It's just...
And how do you do the order flow? So the order flow, I can't say I use it in TradingView, or I know order flow, but I've never investigated it. I mean, how do you do that? How do you use that?
So I will go through the order flow data. Well, there's a group on Telegram of a guy that compiles the data, and he shares the data with us. But the data is also freely available on TradingStir as well as the Chicago Mercantile website. But he just compiles it in a much more easier format to read, if I have to put it to you like that. And we are going to have a look at the order flow data also once we get onto the charts. Then I can just, because we have to go through there in order for you to see why the trade makes sense at the end of the day.
Okay. And what about, like, if you had to sort of say, hey, here are 3 things to go and study other than order flow, what 3 things would you go and send someone off to go and investigate?
Price action number, like price action is always going to be at the top of my list.
And define the specifics of price action that they'd need to look at.
So it would be to look, so support levels, resistance levels, and the best time frame to find them on is on the higher time frames for me personally, because I look at higher time frame first. So look for high points in the market, look for low points in the market, and see how the market previously reacted to those levels. And I will slightly give you an indication of how the market's going to react to that level the next time it gets there. If it does not react the same way, then you have to adapt to the ever-changing market environment. So if the market changes, so if the market gets to a previous level of resistance and resistance doesn't hold, it's not your job to say, oh, is it now because I want to enter now, so the resistance doesn't want to hold? No, maybe there's something that had happened at that given day that didn't allow resistance to hold. Good news might have came out, or whatever the case is. So look at high points in the market, look at low points in the market, look at key points, because why? The best places you want to buy is very close to structure in the market. It's going to allow you to minimize your stop losses as well, because the closer you buy to previous, the closer you sell or buy to previous structure in the market, the better the tighter your stop loss can be, because your stop loss needs to be protected by a certain structure in the market, because we know when resistance gets broken, it becomes support. When support gets broken, it becomes resistance. So if you are buying at resistance, you want to make sure that your stop loss is below the close, well, not that close where if the liquidity spike comes in, it just takes you out. Not that low, but it's very important to trade very close to structure. So the first thing I would say for all the people out there is go and learn price action. It's very easy to read once you get the concept, quite easy to understand when you get the concept of price action. But at the end of the day, price, it is the money that moves the market. Price moves the market, nothing else. Maybe something does, but if you look on the right side of TradingView, that is the price of whatever currency it is that you're looking at. So that's the first thing. So you're referring to this at a chart, like
at a chart, yeah.
Okay.
Just chart.
So the first thing would be price action. The second thing would be looking at markets that are trending quite well. So trending markets, so markets that are just whether the market is just going up, whether it's just going down. That will also give you an indication of which way. Market direction. It will give you an indication of more or less which way the market might continue further into the future. Again, but you have to use price action as a second confluence to make a trading decision at the end of the day. And what that looks like is very easy, guys, okay? All you have to do is just go on a high time frame, like a monthly, a weekly, or even a daily, zoom out your chart and just look at your chart. You'll see exactly which way your chart wants to go. Like you'll see, if it's going up, if it's going down. Stay away from markets that are moving sideways unless you get a break out of that consolidation area as well. So that was the first one. That was the second one. And the third one would be to master the Fibonacci tool, because that is one of the most the most useful tools that I've come across, because it allows you to measure retracements in the market, and it also allows you to get your take profits, because we know that the 0.382, the minus 50%, the 61.8, as well as the 78.6 are all used for retracements, and the minus 27 and the minus 61.8 is all used for take profits, which are the Fibonacci extensions are used for take profits, and the Fibonacci retracements are used to measure pullbacks in the market. But you need to make sure that the Fibonacci level that you're looking at lines up with any kind of structure that you see on your left. So that's it. If you can master the Fibonacci tool, because if you take out a Fibonacci and you want to measure a retracement and you understand price action with market structure, all you have to do is you just look for the Fibonacci level that lines up the best with the previous structure. And that is the Fibonacci level that the market is more likely to retrace to as it pulls back.
Oh, interesting.
Yeah. Here we go.
Awesome. Now, and what time frame are you entering on?
Sorry about that. So I just get excited when I talk about these trading stuff. So my analysis goes from the monthly, weekly, and the daily. So I look at that because the monthly, weekly, and daily, those are the best time frames for the direction of the market. And the best entries for swing trading would be on the 4-hour, and the best entries for day trading for me in particular would be on the analysis would be on the 1 hour, applying the same concept as the swing, and entries on the 50-minute chart. There we go. Awesome. So if you're day trader, 1 hour and 15 minutes, and then if you're swing trader, monthly, weekly, and daily, and then enter on the 4-hour.
Awesome. Now, what about from a trading mindset point of view? Have you got any sort of hacks that you've come up with that you find work really well?
Yeah. Rule number 1, control your emotions and don't let your emotions control you. That's the one thing. That's the one thing that you kind of don't want to let happen to you. So always control your emotions all the time.
And what's the hack for doing that? Because that's easy said than done.
No, I'm going to get to that now.
Okay, all right, cool.
Yes. So I believe that there's a direct correlation between trading psychology and risk management. The best way to manage your emotions is to manage your account according to is to manage your risk according to your account size. So what do I mean by that? If you have $100 in your account and your risk is supposed to, or you're supposed to trade a 0.02, for instance, then the best thing to do is to stick to a 0.02, trading let's say a 1 to 3 risk to reward. When your stop loss hits, all you have to do is find another opportunity using the same risk appetite, a 1 to 3 with a 0.02, unless the calculated risk should be reduced. If not, then you apply it again. Because you know what that does is that if you are running into a drawdown and you check your phone, for instance, if your risk is managed correctly according to your account size, up here and in here where the Forex, where the trading feelings come from, you're not going to feel it that much. You're not going to go into an anxiety, because we all get that feeling when our accounts are running into a drawdown. You're not going to feel it that much if you are running into a drawdown of let's say $5 when you've got $90 in your account, as opposed to over-risking your account. Now you're running a $25 drawdown, and then you start feeling a certain type of way. Now, if you manage your risk accordingly, then you don't have to, go through that emotional stage that a lot of us go through when we over risk. So the best way to manage or to not let your emotions control you, for me, is to just make sure that you manage your risk, because the minute you don't manage your risk, that's when you start feeling a certain type of way when you over risk your account. You're going to a drawdown, and then next thing you know, you're listening to love songs and you're looking for help from somewhere that's coming out of somewhere, somehow, or something like that. So that's how I see it. There's a direct correlation between risk management and trading psychology as well.
Awesome. Yeah, that's very, very good advice. Now, let's jump into a quick fire round here before we wrap things up. So,
is it just one? Oh, because I got the trader's mindset.
Sorry, no. If you got more, fire them through. I thought that was it.
Oh, no. So I just wanted to point out two things. Well, it's the strict risk management piece also. And the way to do that is to calculate your risk before you take a trade. Make sure that you're using the correct lot size. And the way to do that is there's a lot of websites that allows you to put in your balance, your leverage, and all of that. And I will tell you exactly what lot size you should be trading for that account. So the second trading mindset would be, that you have to be to just stick to your rules. If you've got it, so you have to be disciplined. So if you've got a set of rules that you follow, just make sure that you stick to those rules. If the market doesn't provide you with an opportunity on that given day, you don't have to take the trade. You can always go in the next day or go in the next day but don't force any trades at all. And the last bit of advice.
Hang on, before you get on to the last one, how do they do it? Because that's, once again, it's the easier said than done thing. How do they stick to their rules? So what I always believe is that if you set up a plan, which is a trading plan, so you write down what your rules are. This is the rules that I need to follow. I need to wait for the market to do X, Y, and Z. All you basically do is that when you do get on a chart, make sure that you have a box, for instance, or checklist that you've got over here. And as you go through the, the charts, make sure that you tick the boxes first to say, okay, this had happened, that had happened, okay, that had happened. And if there is anything that had not happened that was supposed to have happened to satisfy your rules, then at that point, move on to another chart, look for another currency pair that you can trade at. If you find nothing, just throw your laptop down, go take a nice walk, come back after 2 or 3 hours, and then just go and look again. That's it. That's it. So it's just that, yeah. And your third trick?
Is the risk management piece. Please, guys, risk management is very important. So there's a lot of websites out there that allows you to calculate your risk before you trade it. So the most important thing that you want to do is make sure that you calculate your risk before you take any trade, because we trade because you want to risk enough so that you can trade another day. That's how you want to trade. You always want to risk enough so that you can come back and say, guess who's back? Back again. Like, I'm here again. Yeah, so those are the 3 important things from where I'm sitting.
Awesome. Right, well, let's jump into the quickfire round. So how long did it take you to go from newbie to consistently profitable?
About 8 years.
What's your favorite entry setup?
I would say break and retest. Yeah, I would say break and retest.
What strategies do you use to exit trades?
So we trail stop losses according to market structure. So that's what I would use to exit trades. So it's all dependent on market structure. So that's all I look at. I look at market structure to trail the stop loss and to decide whether I want to keep the trade or exit it.
Do you have a recommended trading book or resource?
Yes, that will be The Mental Game of Trading. I think everybody needs to just have a look at that book. It's called The Mental Game of Trading. That is the book
Jared
that
Timber?
Yeah, I think so. I think
he was on the show. That's why it sounds familiar.
Okay. It's quite small over here. I'm actually trying to open it. Yeah, so yes, it's called The Mental Game of Trading. I'm not sure if it's the same, but that's the book that I keep listening to, and that's the one book that I would refer everybody to go and listen to get them out of there.
And what's your preferred broker and trading platform?
So I don't have a preferred broker, so I only trade with my Forex fund. So I'm trading a funded account. So
cool.
But
and
if people want to go to any brokers, I think they need to understand what it is that they look for in a broker first, and then just go and do the research to do that.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description.
Yeah.
Do you want to walk us through your worst ever trade?
Well, I think the worst trade that I've ever taken must have been on JPY, CHF JPY. I think about 3 years ago. So what had happened was there was some fundamental data that trade was taken on directly about the the corona cases, the coronavirus cases. I think it was not sure if it was last year, the year before, but that was after the corona outbreak. But then was said that the cases in Japan had increased. So what I did was, because the Swiss franc is a safe haven as well as the Japanese yen, I bought the CHF against the JPY while the market was in a consolidation phase. And I thought that buying it at that given price was going to be a good thing. And then the market started dipping, and then I bought again. Then the market started dipping, and then I bought again. And then the market started going. But I was still within the consolidation phase, so I was fine. And then the market actually just broke out of the consolidation phase to the downside. And we all know what happened. It was a break, a retest, and then boom. So I woke up that next morning, because I think all of that happened throughout the Asian session while I was asleep. And then my account was taken back to step one. So that was probably the worst trade as far as I can remember.
And was that trading without a stop loss, or it just too many positions?
No, like at that trade was no stop loss, because it was just purely based off the fundamental data. Yeah. So I had a separate trading account that I used to trade fundamental news in that way before I've exposed myself to the way that I look at fundamental data at this moment. And we all traded it that way back then, the fundamental data. Before the data gets released, you just buy because you think it's going to go up, and you just sell if you think it's going to go down, yeah.
Now, last question. If you could leave our listeners with one piece of advice, what would it be?
Well, the best advice that I can give all of the beautiful people out there is, like I said before, is that before you want to go invest into anything out there, take out the time to invest in acquiring the knowledge first. And most of the information is available freely on YouTube, on the internet, and don't be influenced by some influences, but rather just go and gather as much information as you can, because you must tell yourself, I can, I will, I must. That's what you must tell yourself. I can, awesome. I will, I must. Yeah.
Brilliant. Well, look, before we wrap up, what's the best way for the guys to get hold of you?
Well, I've got a YouTube channel over there where I provide daily educational content. So you can just search for Rolio Jack, and I've got a lot of videos that I've made there. And I'm also on Instagram, Rolio Jack as well. And you'll see there the same photos as well. So that's the only two places I have.
Brilliant. Well, look, a big thank you to Rolio for sharing with us today. Everything was discussed here, along with all those links, will be in the show notes. To find them, simply search for Rolio. That's ROLIO in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, there you have it. Interview with Rolio done and dusted. Hopefully you took a lot out of that journey, and it doesn't end there. We've got that video that we shot. Remember, he's going to teach you a way to see market sentiment that I haven't seen before, and it's really unique and very useful, I've got to say. We also put him to the test as well, and you get to learn a strategy. Video links probably in the description here on podcast, YouTube description, it won't be description on YouTube, it'll just be on the YouTube channel, so go and check it out over there, Trading Mini Courses playlist on the YouTube channel. And look, we also, as you heard, talked about mindset stuff in the interview. Now, if you're looking to get your mindset on point, go and check out that webinar on the Genius Trader. So it is discovered the number one brain mistake stopping you from being a millionaire trader, with my own personal mentor for mindset, Andy Murphy. So go and check that out. And also, whilst you're over there on Trading Nut, do remember the $100 account challenge. See how the performance is going. Market's going to now open in 10 minutes, so I'm going to see if that 20% drawdown still exists or if it's disappeared and we're in some sort of profit. Now, it's the Trailblazer bot. You get access to that bot, the source code of it, if you join before the account doubles or blows. All right, guys. Thanks for listening. Thanks for watching, and we'll see you in the next one.